G'day, it's Aussie Dollarman. Welcome to the Forex Form Guide. In this episode, we're going to take a look at the Aussie US dollar, the pound, the euro, and the yen. Quick disclaimer, this video is for educational and informational purposes only and shouldn't be taken as a recommendation or trading advice. So let's kick it off with the Australian dollar. It's been in a very sideways formation all year. There's the beginning of 2025. We've barely traded outside of a 2 to 2.5 cent range throughout these last 3 months or so. We did put in a strong low in February. I had hopes that we would kick off to the upside a little bit more than we have. We certainly put in a good first few weeks there. After that, though, the pullback, that's fairly normal. And then since then, you'd expect that next leg out to start showing some strength. It hasn't done that. It's had an okay run up for its first little leg there, and then it's gone a little bit choppy and sideways. Failed to really clean out that last top there and spent the rest of last week running down. So it's starting to look very, very bearish. From a trader's perspective, probably not the time to be jumping in and hitting it short, given that we've been running down 1, 2, 3, 4 days already. But they're the sort of times where you think, okay, it looks like it's setting up for a down move. Let's wait for a lower top or a potential retest setup and see what the market offers us. Let's have a look at the charts. You can see on the monthly chart, we did have that outside reversal bar there with the February low, and it's been an inside month up and down a little bit in March. Moving to the weekly chart over here, we actually had what's called an outside reversal week on the Australian dollar this week. We opened, we ran up, and then we've come down, and we actually did break the last week's low, and we've closed right near the low there. So just based on that, there's a very high probability that the Aussie dollar is going to be heading down this next week. That looks really weak, and I'm starting to think that that move is done, and we're going to be heading south. As I said, here's a daily chart here, this one down here. You can see a run down. I'd be expecting a bit of a pullback into a lower top. Markets generally don't just drop from nowhere. You'll have a run down and you'll have a pullback or a retest, whatever you want to call it, a lower top. And if you do get a weak lower top there, that's where I think the market would run down strongly from. I think this has a little bit more to go. I don't think it's just going to pull up where it is there, but I do think that we are going to see a down week on the Australian dollar next week. And it is looking quite bearish across the board. If we take a look at the pound, we've now had a 62.5% retracement here on that's the monthly run down there. As I've been saying these last few weeks, we've broken a bunch of lows there on the monthly chart throughout here. To me, this looks like a monthly lower top. And if you look at this monthly upswing here, it's unfolded so far in 3 sections. You had a run up, pullback, a run up to here, little outside reversal week there. That counts for me anyway as your second section up. And then a third section there that's fallen just short of the length of the second section. So there's a good chance that that run up here is over and we're going to see some downside momentum here. What'll be interesting is if we get back below that 50% milestone and then we come up underneath that, that's often a very good place to look for a move. Whether you're going long or short on a market, breaking through 50, then coming back below and then retesting and failing at that 50% can be a key level to watch. On the daily chart here, a bit like the euro, it has also been quite sideways through this period here. We've only really just made that top there on Thursday last week and 1 day down on Friday. We'll wait and see what happens this week, but I'll be looking for a little bit of a rundown and then again, that lower top there. A lot of traders make the mistake. They see a market make a top and then it runs down a bit and then they think, oh, the move has started, I want to get in. But often when the move's been going down 3 or 4 days like the Australian dollar has, your reward to risk ratio on the trade simply isn't there. And in most cases, as Gann said, the safest place to sell is that first lower top rather than, oh, the market's been running down 4 or 5 days. It must be bearish. I'll jump in short. In my experience, it rarely ends well if you jump in that way. You're better off waiting for that retest. Over here, you've got on the 4-hour chart, you can see it has been quite sideways since about the 6th of March there. Not much further to go though. And if we break out of those lows there, that's backing up our downward trend there. And again, it's just about waiting for that retest. The euro is actually probably giving us the clearest formation there, but it's actually the one that doesn't look as weak. So it's interesting. In terms of a top area, we ran 200% of that weekly range here into a 75% retracement. That's a nice area that I've seen work as a price target a lot of the time. However, it's been a very strong month running up there. So it's giving slightly mixed signals there. For me, though, in these circumstances, you know it's been running up so long. That's 1, 2, 3, 4, 5, 6 weeks. Yeah, really strong run up, hitting a key pressure point there. In those circumstances, you can normally take a trade with a fairly tight stop loss near a tight price level there, and then you put a stop loss on. When the market runs down a bit, you can move to break even, and then you just sit in the trade and let it unfold and see what happens. And either it turns around and runs up and takes you out and you get stopped out for a break even, or it runs down and then slowly sets up and then maybe fails under 50% or something like that. And you say, oh, okay, now I know it's going down, but you're already in that position with a break even stop loss on, and you're in a pretty good position to profit from it. So a fairly similar formation there across the euro, the Aussie dollar, and the British pound. If we go to the US dollar yen, you can see it's been a pretty sideways week. You can see that down here on the daily chart. We've had a run up, a higher bottom there, and we've started running up there. WD Gann said that two higher bottoms like this, so there's one and then another one here, is stronger than triple bottoms because the market wasn't strong enough to push all the way back down and make triple bottoms. So if we push up from here, we'd be above a 50% retracement. We'd be cleaning out those highs there, two higher bottoms there, and I would say the US dollar yen is heading up. And if that's the case, that would back up what I'm seeing on the Aussie, the pound, and the euro for US dollar strength and weakness in the other currencies. If we look at the economic calendar, a bunch of manufacturing and services PMI announcements coming out on Monday, the 24th of March. Then on Wednesday, we've got the CPI year-on-year figures for the Australian dollar, which I have to say, I'm not an economist, but I have no idea how you can say inflation is only 2.5%. I don't know anything that's only gone up by 2.5%, but there you go. I know that they fiddle with the information a lot, and if you dig into it, you'll see it's actually a lot higher than 2.5%, but there you go, 2.5% they're expecting. And we'll see what happens there. And then on Thursday, we've got the final GDP quarter on quarter for the US. Before we finish, I just want to quickly take a look at 4 monthly charts to get a bit of a long-term perspective on things. Here's the Australian dollar going back to its highs in 2011. It's obviously a pretty sad sight for the Australian dollar. It's been going down, down, down since it exceeded parity back in 2011. And we're down here at 62 cents. With the bearishness that I see now, if we run down a bit longer, it could be a rough year for the Aussie dollar, but as you can probably appreciate, we're starting to get to what could be the end of a long bear market. And if you take a look at what's going on in the US, they're doing a lot of stuff at the moment, and the markets will react to that over time, of course. And it wouldn't surprise me to see short-term gain for the US dollar and see some of these markets tumble. But then after that, given how long they've been running down, a strong low being put in, and then the markets rallying hard from those lows and rallying for a long period of time. So we'll keep an eye on that as the year unfolds. I don't think that sell-offs have finished for the Aussie dollar. As I've been talking about on the channel for a while, I think there's a big one coming later in the year. But you can see that's been running down a long time. The pound's been running down since its 2007 top. And again, if we do run down here, it's been running for a while. So while it may have a bit of a rundown, I'm thinking later this year, maybe next year, we'll see a low and a strong run up in the pound. Over here, the euro, it's been running down since 2008. And the US dollar yen, it's been running up since 2011. So what I'm saying is we've been in this trend or this bigger picture move for a long time, about 14 years. And 14 or 15 years are both pretty good timeframes for long-term moves in a market. So it wouldn't surprise me if we're close to the end of these moves. Not saying that we're there yet, but it wouldn't surprise me if we're getting close to the end of those moves. That's all for this week's edition of the Forex Form Guide. I'll see you next Sunday at 7 p.m. Have a fantastic week. Wishing you all the best with your trading, and bye for now.